What you need to watch out for is VAT. Know where your customer is, know the tax treatment between you and them, and know whether or not you fall into VAT thresholds in the UK, whether or not you need to pay VAT in the EU. By not knowing the position of the business, you don't know what your next steps are, how to invest, that sort of stuff, but you also don't know what's coming with expense-wise. We have loads of creators that use a part of their home which might be green screened, it might be all set up for the content. So you should be able to claim a proportion of the running costs of your own property against the business activity, because of course the business is using it. From a tax planning sense, in most cases you save the most amount of tax and the most amount of your own money if you pre-plan what you're doing. 5-10 years, this is what I'm going to do as an exit strategy.
Hi there, so in today's video we're going to be talking about 5 costly money mistakes that content creators and influencers make and how you can avoid them. So as always, I've got my colleague Brendan with me here today from Capture Accounting. Hey Brendan, how you doing?
Hi everyone.
Good. So Brendan, we've got 5 costly money mistakes that influencers make and how to avoid them. So let's hit them one by one. The first one is VAT. So
definitely. It gets very colluded because it's you have international sources for income. And in most cases, people don't know the difference between a digital supply, normal supply, and there can be huge ramifications because of that. So what you need to watch out for is VAT. Know where your customer is, know the tax treatment between you and them, and know whether or not you fall into VAT thresholds in the UK, whether or not you need to pay VAT in the EU, whatever it might be. Just check it out. Make sure you ask your accountant, make sure they know what the supply is, make sure everything ticks the boxes.
Absolutely. And it's not simply a case of having to go through the VAT threshold of 90-odd thousand in the UK, because if you are selling something like a digital course in the EU, no matter how much that course is for, you are liable for EU VAT on that. Is that right?
Yes, that's correct. So on digital service supplies, which is mainly just no human interaction, downloading PDFs, courses, webinars, that sort of stuff, is all of that, ebooks as well, all of that is VATable in the EU, and there's no threshold. One sale, you have to pay VAT in that country. Absolutely.
And we did a more detailed video on this, so we'll put a link in somewhere around this video for you to go and have a look if that's something that is going to affect you. So let's move on to number 2 costly mistake is poor record keeping. So talk to us about that. How can that affect content creators in terms of the amount of money that they could be losing?
We all know to be a content creator, it's artistic in the way that you are. The video, the contents, everything that you put out there is kind of your vision of being an artist, essentially. And what you don't worry about in the background is admin. Okay, we know this. So when you're looking at poor record keeping and how can that damage your business, it can damage it more than you know. By not knowing the position of the business, you don't know what your next steps are, how to invest, that sort of stuff, but you also don't know what's coming with expense-wise. It's volatile. It's very volatile with content creation. At the moment, ad rates are low, for AdSense and that side of things. So how can you deal with the drop in income? How can you deal with that? Have you got the cash flow to support that? Have you got the steps that's in place? But the most important thing for me is claiming against your tax. If you don't know what expenses you've incurred and you come into it in a year's time, you're never going to claim all that you can, and you're going to end up overpaying in tax.
Absolutely. So that brings us to number 3, which is expenses. What Definitely. Are the common expenses that most content creators miss or don't claim that they potentially could, and missing out therefore on reducing the tax bill as a result?
So the common stuff we all know at the moment, most of the costs that goes into it is editors, photographers. It can be gym access, where you have to get day passes to be able to do fitness platforms, but most of the things is all around mobile phone content, so you can claim your mobile phone. So it's for key one that is missed as well. And for use of home, for example, we have loads of creators that use a part of their home which might be green screened, it might be all set up for the content. So you should be able to claim a proportion of the running costs of your own property against the business activity, because of course the business is using it.
Absolutely. And this is something that is often overlooked by many accountants, or they might be a bit more sitting on the fence on whether you can or can't claim, but you absolutely can. If you're using a part of your home, your flat, and you're paying rent, or you own your own home, you can claim a percentage of your home running costs as rent to you, essentially, for renting out your place to your business, which is separate from you, in order for you to be able to create content there, whether that to be doing your videos, doing your podcast, doing work there, whatever it is, that can be something that you can claim, but often people miss it. So moving on from expenses, the 4th mistake is withholding tax. Talk to us a bit about that one and how that can be avoided.
So the US brought in a digital tax, essentially on digital service suppliers, mainly on you see it on Google's, the Metas, the big boys in the market. But the idea of it is if you have US viewership, then you have to have a 30% deduction at source. Okay, most people actually miss out that the UK has a very strong tax treaty with the US where you can actually claim a 0% withholding tax. You have to submit certain forms to the IRS, but you can claim 0% on this. And a lot of people do miss that out. They end up incurring it. And although it's not a massive negative because you will claim it as a tax credit later on, you're losing out 30% at source. That's 30% less cash in your pocket to either invest or even put into your next piece of content.
Yeah, absolutely. That's massive. So worth kind of investing that time at the outset to make sure that you've got those forms completed, lodged your claim for exemption, so you're getting 100% of the income from places like AdSense and making sure that's in your pocket as opposed to theirs. So last but not least, not having an exit strategy is the final mistake that we see that content creators have. So talk to us a bit about that one and how to avoid it.
This is the biggest point for me. So from a tax planning sense, in most cases, you save the most amount of tax and the most amount of your own money if you pre-plan what you're doing 5-10 years. This is what I'm going to do as an exit strategy, because it can change. You could say to me, I'm going to sell this company in 5 years, so me taking out astronomical amount of dividends and incurring additional rate tax might not be the best option. You might be better to actually take out less dividends and then just have a higher company value when you come to sell. Or it could be you say to me, actually I want to start investing in a vehicle to then invest in property, shares, whatever you want to do with it. Then again, that comes with tax planning opportunities for us to save you a lot of money by saying if you've got a company, you can do a company to company situation and you can save having a deduction in between. So you've got to know what the next steps is for you and the business. And it might sound like it's a million miles off, especially if you're just getting monetized now, but know in 10 years, what do you want to do? Do you want to continue with content creation indefinitely? If you do, and you want to sustain that through the company, then you can keep going and going and going in certain ways to make sure you're tax efficient. But if you said to me, I want to push away from content creation, which I see mostly, then you can then look at the next stages of how do you do that tax efficiently? How do I save money in the long run? And honestly, it's the biggest way to sustain wealth going forward.
Absolutely. No, that's a really good point you made, and often something that we come across in conversations with client, and that's the benefit, I guess, of working with someone like us as your advisor, as it were, as your kind of trusted advisor, where we don't just do the compliance work, we don't just submit forms for you, we're having conversations with you regularly about what you want to do, because you might not know what you want to do in 5-10 years time, but at least if we are having regular conversations with you, for example, if you're you say, I might move abroad in 3 or 5 years time, that's something that we can plan around, and there are things that we can do on your finances, on your taxes, to make sure that you are optimized and keeping more of what you earn. So that is something that we offer as a service to all of our clients, because for us we don't get charged extra for any phone calls or emails or conversations you have with us. It's all part of the service, the personal service that we provide to content creators and influencers. Fantastic. Okay, well, thank you very much, Brendan, for sharing that with us today. Hope you got value from today's episode. And as always, if you want to have a chat with us to see how we can help you with making sure that you keep more of what you earn and ultimately build up the wealth that you desire and the life that you want, then feel free to click on the link below and come and have a chat with us. Take care. Hope you got value, and I'll see you on the next one. Bye for now.